is it? Go out of here.
All right, Johnny. But what about my money? At 10%.
Too bad AC ain't in charge. It's out. Hey.
I think I'm playing a pirate
Yella,
virgin, Cory.
No good keister off my property. Keep the change.
Yeah, Cory, I think I was showing a pirated version from YouTube there. So I just thought it'd be fun to open up a little Home Alone. What's your favorite? First of all, hello, America. My name is Jason Schultz. This is my friend Cory Otto. I'm with USA Mortgage. He's with EXP Realty. Jackie's eating turkey and stuffing her face with some broccoli and mac and cheese and probably drinking beers. Don't you think, Cory? Be my guess?
Probably. Yeah.
Probably. So happy Thanksgiving, everybody. Every Sunday night, we get on here. We just talk about what's going on in the current real estate market. And this week we're going to talk about, like we talked about, like 2 weeks ago, we talked about, was it sellers getting ready or buyers getting ready? I can't remember how we did.
Yeah, we talked about top 10 do's and don'ts of buyers. That was 2 weeks ago. And last week was do's and don'ts of sellers. And I really just, as we talked about, hey, what can we do here? I just sometimes think that buyers need to understand the process completely from start to finish. I get questions throughout the transaction of, hey, what happens next? When's the appraisal get ordered? When do we do the inspection, before or after acceptance? So I really just wanted to come up with a document and outline that shows, hey, this is how it works from start to finish, from and everything in between. So that's really
so tonight we're going to kind of do really like a step-by-step guide for home buyers, because we're going to kind of come up with, we have some main topics that Cory and I put together, and we'll just kind of talk about them from the lending side here with me, and then with Cory on the real estate side. So first of all, Cory, what's your favorite holiday movie? I put Home Alone up. I think that's what's one of my wife's favorite movies. So if it's my wife's favorite movie, it's my favorite movie too. And she likes Snoopy too, Cory. She likes
Snoopy. Home Alone.
Oh, and Christmas Story. We have the leg, Cory. We have the leg.
Oh,
the little sexy leg.
Oh yeah. I think what's the real name of it? But don't shoot your eye out. The BB gun.
Don't shoot your eye out.
What's that?
That's Christmas Story.
Oh yeah, I think that's a classic.
Yep.
They are considering. Do they consider that Die Hard movie a Christmas movie now?
That's not real. Not real Catholic, as I'd like to say. It's hard to say. Yippee ki-yay!
Yeah.
Well, is that one making a comeback?
I think it is. I feel like people talk about that like it's a Christmas movie, because she was like aren't they having a Christmas party when it starts out, or like an employee?
Yeah, she's like your employee and Christmas party.
Yeah, so I think because there's Christmas in the party in there, that but yeah, any of those. But those are some great memories, laughs to bring up.
For those of you that are watching, throw your favorite Christmas movie in the comments, please. Yeah. And then I saw a funny meme. Cory said, "I wish the Pilgrims would have ran into a bunch of cows and said to a flock of turkeys, so we could have brisket instead of turkey."
That's yeah.
Turkey's good. Turkey's good. Ben Coleridge watching on Facebook says, "Happy Thanksgiving weekend." Yeah.
Ben.
So I relaxed for a couple of days, and then I got some work done. I took a couple calls. We had a couple people write offers this weekend. So it wasn't crazy busy, but it was still busy. So
same with me. I had some stuff going on. I had inspection Friday morning, and then Friday night we did the downtown holiday parade. I was a judge for that, so the holiday lighted parade, we had that. It was cool.
I saw you shared somebody's live video.
Yeah, that was good. And then
at least we didn't get to snow like Missouri did, and like out east they got pounded.
Right. So then yesterday I showed some homes, and good weekend. Still time to be out there looking.
Yep. Okay, so we're going to go through. We have how many bullet points? I think we put together 10 bullet points tonight. We're going to kind of talk about each one of them here. But again, step-by-step guide for home buyers. And the first thing that came up was assess your financial readiness. For me, Cory, I want credit score is a big thing for me as a loan officer. What somebody's going to qualify for. If your Credit Karma says you're 620 to 630, you're more than likely around a 600. A lot of my clients that I work with are first-time home buyers. They're looking for that zero down loan. I need a 620 credit score to possibly qualify for like a USDA or a VA. Sometimes we can go a little bit lower if there's extra money in savings and stuff like that. But like we can go down to a 580 credit score for FHA. and but you need to put 3.5% down then. So that's really, I feel like a lot of people don't know exactly where their credit score is, Cory. Or I always tell you there's 3 kinds of credit: good, bad, and zero. And for people that I paid cash for everything, or I banked with a small bank and my bank didn't report to the credit bureaus, I run into that from time to time. Not as much as I used to when I first got in the business, Cory, but I think for the most part, most even some of the smaller local banks now are reporting to the Experian and the Equifax and different things like that put together like those. I call those soft pulls for credit. Like when you get your credit card companies, oh, your credit score has gone up or it's gone down. But the one thing I don't like about those is when we do pull a hard hit, it shows that their credit score went down like 60 points. And you and I both know the only way your credit score goes down 60 points is if you miss a payment or something like that. That's not real life. So that's the one thing I want to talk about right away was credit score. Filling out an application so you know where your credit score is and your actual credit score from the from our bureau, the 3 bureaus. We take the middle score. So let's say you score like a 712, a 682, and a 701. We're going to use the 701, and this is how all financial institutions do it. They use that middle score as it's not merged together. It's not an average. It's that actual middle score. So as a real estate agent, Cory, and when you're meeting with a new buyer, and you see assess your financial readiness, what comes to your mind?
Yeah, I think, again, know what your credit score is by, looking on the various, I do credit monitoring, credit monitoring myself. I realize it's not exactly on, but, it sends me alerts and things that I can do to improve. I pay down some credit card debt, my score improves. So yeah, I think that both with, I think everybody's just afraid or says, hey, I'm never going to be able to buy a house. My credit's not good. Those are the people that frustrate me where, hey, let's get you over to Jason. Let's get you over to Jackie. Do an application for the pre-approval process to get started. And then you guys can take a look at their credit score. And, there's been times where, things are not looking great, but, I know that both you and Jackie have been good on saying, hey, do this, pay down this, pay this off. So yeah, I definitely think that credit score is important. I know that along with that, we've talked about down payment. So, a buyer, meets with you guys, fills out a pre-approval. You can let them know what options they have, and then they'll be able to decide or know what they'll need to save for a down payment or what they'll need to have on hand for a down payment.
Yeah, one of the biggest, I don't mean to step on you, Cory, there, but one of the biggest misconceptions I hear all the time is that people think they need 20% down to buy a house. And I think that's one of the things that kind of holds them back the most, and that's just not true at all.
Right.
USDA, VA is 0 down. FHA is 3.5% down. Conventional can start with 3% down as well. Because that's probably the hardest part. I mean, who saved 20% down to buy a house? I don't think I ever would have. I like to go tractor pulling too much. So right. I used a VA loan to buy my first house. I used my veteran benefits, and it was great. And I really, really appreciate that. Still do. So it's good stuff.
Yeah.
It was good stuff.
And then when I mentioned before about saving, so then there's 2 forms of amounts that you're going to need. So it's your down payment, and then the other is closing costs. Can you talk a little bit about closing costs and what the average?
Yeah. So if you escrow it, and most people do, even if you don't, the only time you can't escrow or you don't have to escrow is if you have 20% down. Escrow means that your taxes, your insurance are included in your monthly payment every month. So let's say just for simplicity, we're looking at a $200,000 house. We're putting 5% down. So you're going to need 10 grand down for a down payment. And then your closing costs, I've been doing this long enough. I'm going to say on the $200,000 house, you're probably going to need another $4,500. $2,000 of it is our lender fee. Every lender charges either an origination charge or a lender fee. And that $1,200, $1,300, $1,400 range is pretty common to what I see with my competitors. And then the rest of it, your title fees. And the other $2,000 to $2,500 is based upon your first year of homeowners insurance. So you're going to pay for your first year of homeowners insurance up front. And then we, the lender, are going to put 3 to 4 months of your taxes and your insurance into what we call an escrow account. So every month you make your payment, you're paying into this account. We're going to pay your taxes for you. We're going to pay your homeowners insurance for you. That also includes your appraisal cost as well. That's where I kind of come up with that $4,500. So obviously higher taxes, higher homeowners insurance, higher your closing costs are going to be on something like that. So I would say on a $200,000 purchase, in the markets that we live in, Cory, you're probably going to need about $15,000 cash to close. Okay, and that's where you, as an agent, we can ask for a seller credit of $5,000 or $4,500 to pay those closing costs. And what we do, people, is we build that into your loan. Then, so like on this $200,000 house, I'm gonna ask your agent to write an offer at $200,000 with a $5,000 seller credit. So you're going to finance 205, okay, Mr. or Mrs. Buyer. The seller is going to give you the $5,000. It's just going to slide on the balance sheet or the closing disclosure over to the other side, and they're still going to walk away with their 200 because that's important to them. And I do this a lot with USDA clients, FHA clients, people that want to. Yeah, I have $20,000 in the bank, Jason, but I want to save it for some improvements, or different things like that. Or I have people that don't have that extra $5,000. So it's almost a necessity, if you will. And there was a time we had a hard time getting these seller credits, like during COVID when it was super competitive and the rates were really low, and there was like 10 to 15 offers on every house. We're back what I call into a regular market now, where there's still activity, but we're not beating each other up. There's not legitimately like 30 people going to an open house anymore. So it's bringing back the art of the good listing agent to get the house sold, because stuff is not moving in 2 days like it used to. There's still a couple of occasions you're going to read about that, and agents are going to post about that on social media. Hey, I just listed this and I got an accepted offer in 2 hours. And some of that happens, but I would say a lot of times if you scour Zillow, Realtor.com, all those sites like that, Cory, you're going to see the stuff's been on the market a couple of weeks, maybe even a month. Just because I think up until the election, and we've talked about this every week, I think a lot of people were like, I'm just going to wait and see what's going to happen with this thing. I think we know what we're getting into, and I've noticed not like a steep increase in business, Cory, but a little more of a relaxed mindset and like, okay, this is what we got, let's go. And I feel like it's starting to pick back up a little bit again. So,
and then I know you've talked about it in previous weeks, but I kind of want this all in one location. So when you're talking down payment and closing costs, and then cash to close. So again, we're on that $200,000 house. And what did you figure between?
I figured 5% down just for simplicity. Okay. So $10,000.
Right.
And then I figured $4,500 for your closing costs. So your cash to close would be about $14,500 to $15,000 on that particular property. If you did put earnest money down, in my world, that's pre-down payment money. In the real estate world, that's kind of a vote of confidence. Like, hey, I'm putting some money down on this house already, but that money is held in by the title company or by the listing agent's account, right. And that money then is applied directly to your closing costs. So let's say you did $1,000 earnest money, you're going to have to bring about $13,500 to close then, and you get a cashier's check a day or two before closing. Once you get your final close, you get your clear to close from your lender, and then title and the closing department, they work out the final numbers on this. And because you have daily interest, because like if you closed tomorrow's the 2nd, your first payment won't be due until February 1st, but you do got to pay interest for January or for the month of December. So that's some of that's all calculated in there on that. And it's hard. Nobody can give anybody an exact number, Cory, the day that we start, an accepted offer, but I can give people a real good guesstimate, if you will, where we're going to be within a couple $100, what their cash to close is going to be.
And then, so say somebody, we're at that 200,000, we'll round it up to the 10,000 for the down payment with the 5% down, and then around $5,000 in closing costs. If somebody doesn't have all of that, there are some options.
Correct. We can come in with that seller credit. You can ask for a seller credit to pay for your closing costs. You do have to come up with your down payment. You can't ask for a seller credit to pay for your down payment. If you don't have $10,000 and you really want this house, you can go borrow from your 401k. You can get a gift from family or close friends, and that's typically the most two common things I see. You can't go borrow money to borrow money. You can't go to the payday loan store to borrow money. You can't take out a loan to borrow that money. Right. So that's where having that better credit score is going to allow you possibly to get into that zero down loan, Cory, in that situation.
Love it.
Number 2, we said identify your needs and wants.
Yeah.
So why don't you run with this, Cory?
Yeah. So I think the first thing, is, we've talked about in previous, but what are you looking for? What's most important to you? I actually suggest, making like a pro and con type list of things that are necessities in a home versus, number of bedrooms, size, location, school district, and then, things that you would like to have. Yes, maybe you need a 3-bedroom, but you would like to have a 4-bedroom. Maybe you need at least a 1-car garage, but you would like a 2-car garage. So it's really just identifying your needs and wants in the physical home. Again, location, you have to figure out what that means to you. If a school district means something to you, if you have a commute to work and you need to stay a certain distance of that. So really, when I'm meeting with the buyer for the first time, get them started on the pre-approval process. And then, I'm going through like a questionnaire of, hey, what do you want? What do you need? And, what are your must-haves and what are your things that you would like to have? So it's kind of just creating that list of, what you need in your first or second home.
Yep, agreed, 100%. That's well said. Well said. I don't really have a lot to add to that one, so I'm going to move to number 3 here. Find and commit to a real estate agent. I'm going to grab that, Cory, if you don't mind.
Okay.
The biggest thing for me is I think a lot of people think they have to call the number that's on the sign, and that's not true at all. Find your agent. In a perfect world, you're going to get pre-approved. Then you're going to find a buyer's agent to work with you. You've met with them. You have a good feel for them. Then they can show you any house. Then they can watch the markets coming up, the MLS, what's coming up on, hey, this is coming up on the market on Thursday, or this is, they have someone in their office saying, hey, I have a perfect house for your buyer that I'm going to be able to list on Friday. They're knowing that you're looking for 3 bedrooms in a certain school district on a dead-end street, because I don't think you'll ever find the perfect house, Cory. There's probably always going to be one thing that, I wish is this, but you got to take the goods with the bads on some of this. But I really, you want to get a real estate agent. I think a lot of people, it's changed a little bit now, Cory, on who pays for the agent. You know what I mean? I will admit that has changed. There was a time that the seller paid for everything. I still think that's sometimes the case,
right.
But we are starting to see some buyers pay some real estate agents and different, if somebody's going looking for sale by owner. And the reason you go for sale by owner is because you don't want to pay any real estate agents. And then a good agent can work that through that process with you. But you need an agent to help you through the process, because it's not as easy as just watching a YouTube video. And I've heard that before. And that's why I say that. I had a kid tell me like 4 or 5 years ago, he doesn't need me. He watched a YouTube video on how to buy a house. And I just chuckled and I wished him good luck. And actually, he did call me back a couple weeks later. And he did say YouTube was very informative, but he did need an expert. And his real estate agent had to send him back to us for a little bit of a hug. We hugged it out, Cory. Is that fair?
That's right.
So,
that's right.
Had some fun with that. So.
Yeah, again, we've talked about it in previous, but I'd certainly like to get it wrapped up into one episode here where talk to an agent, tell them what you're looking for, ask an agent questions. I'm fine. If you want to ask me questions about how many deals I do, or how much I work, or what time I am available, those are great questions. I don't mind them. And if we're a good fit, I'm going to commit to you. You're going to commit to me. You're going to look for properties. If you find one, you're going to contact me. So that's the other concern, is when you are working with a real estate agent. I've had some, buyers that get excited and say, hey, I went on Zillow, found this property. I'm set up to see it tonight. How are you going to write that offer for me? And, that's not how it works. Again, it's important once you commit to an agent, that agent. So if you commit to me and I'm helping you to look and write offers on homes, I need to show you the home. It's important process. We're going to go look at the home together. If you go to an open house, that's fine. Just let the person know at the open house that you're working with an agent. And if you go to an open house and want to write an offer on an open house, I'm going to go see that house for you before I write the offer, either with you a second time, or I'm just going to go look at it myself, because it's important for me to, be able to see a home before I can, give you any advice on where we need to be on writing an offer. So.
And I didn't know the value of a real estate agent, Cory, until I really got involved in the business. One of my first deals was a friend was selling their house to a friend. And by the end, we didn't even close in the same room because of a water heater.
Right.
I thought it was going to be fisticuffs, Cory. And back then I was like super scared. And to that day now, I'm like, unless you bought, I don't want anybody to not use a real estate agent ever. Just because of all the paperwork and the laws and setting stuff up and things like that. But that's a funny story, Cory. Some night if you ever have a bourbon with me on the rocks, I'm gonna tell you that story. That was a wild. They called me like at 10:30 night before. I'm not buying that house. Well, when they were moving, somebody had bumped the water heater, Cory, and turned off the gas. So they didn't think that there was heat in the house. And of course, it was cold like this out. It was a December closing, and man, it was wild, Cory. It was wild. It was wild. So again, this is This Week in Real Estate podcast. Cory and I and Jackie do this every Sunday night at 7 p.m. Central. We just talk about current market conditions. We write down things throughout the week that a buyer or a seller asks us. And we're like, hey, if they're asking about it, we should probably share this in our podcast. And we've been doing this consistently. And I'm proud of us for doing it every Sunday night. I bounced in the back of a motorhome going across the United States one night, and Cory and Jackie, there's always two of us on here. So that's been a lot of fun. So we thank you for watching. If you pay attention to our social media, we break up shorter clips throughout the week as well. For those of you that don't get the obvious, that want to sit with us for 30, 45 minutes on a Sunday night. But I appreciate those who do. Number 4, things that buyers should do, getting ready to buy, guides for home buyers. Start the home search, Cory. So let's talk about that a little bit.
Yeah.
So we're pre-approved. We're pre-approved. We have an agent. Now what's, where are we at now, Cory?
Yeah. So what I do is after I interview a buyer and meet with them, I go from their needs and wants list. I turn that into a search. There's several things we can do. I ask a buyer, I'm like, hey, do you want to look on your own? Do you want me to look for you? Or do you want me to set you up in an automatic search? So those are just the options that you have. It's obviously, if you're tech savvy and are fine with it and understand the process, you can look online. Some of the sites like Zillow, Realtor.com,
Yep.
And those home searching sites. The thing about those, though, is that sometimes that even if a property has an accepted offer on it, it gets continued to be marketed on there until it closes. Realtor's getting a little bit Realtor.com's getting a little bit better, where you can see the word contingent on there. Contingent means that a buyer has an accepted offer in on that property. Sometimes it goes to, buyer no show or accepted offer no show and accepted offer show. So you can sometimes look at properties if they have accepted offers on them, but just be aware that just because it's on Zillow, just because it's being marketed on Realtor.com, and you're finding a house online doesn't mean it's, actively for sale. So again, when I'm working with buyers, I find out what they want me to do. I look at properties that come on the market every single day. So sometimes a buyer contacts me and says, hey, I found this house that just came up. And I say, yep, let's go take a look at it. Or sometimes I send them a property and say, hey, I found this house, thought about you. You want to go take a look at it? Yep, set it up. So there's several different ways that we can do it. And any combination of that, whatever a buyer is comfortable with. And again, I can also set up automatic alerts where, a property in your price range, city, number of bedrooms gets sent out to your email or text. So once you are able to browse listings, find ones that you're interested in, we set it up, we go take a look at it. I bring along some paperwork. We can see a real estate condition report that the seller would fill out. I'm going to be looking and using my knowledge and experience to go through the home, point out goods and bads or concerns that I have, and take some notes. If you're looking at more than one property and you have to make a decision on it, you can go home, talk about it, ask me questions, and then if you decide that one of them works for you, then we move on to the offer process.
Yeah, as a lender, if you're qualified for an FHA, a VA, or a USDA loan, if you're looking at a property that needs some work, has some peeling paint, some missing handrails, it's a good home, but it's a little rundown's not the word, Cory, but needs a little TLC.
Right.
I want to see
some maintenance.
Thank you, boss. I want to see some pictures possibly, or I want to know that the seller's willing to do a couple small things. And then if you're looking at a manufactured home, and this is a perfect example, one of my agents called me this morning and said, hey, Jason and Kim, we got an email like at 7:30 this morning. They want to write on a manufactured home, which is a single wide or a double wide. Those have different rules with different, there's different years that they have to be built by. So I got burnt by some of that stuff early on in my career, Cory. I just said yes to everything, and there's real estate agents today that would rather probably shoot me because the most frustrating thing for an agent is when a lender says, "Oh yeah, we can buy this house," and then we get into it, and then we have to say, "Yeah, I was joking," or "I'm a moron and I don't know what I'm doing." So, but that back then that was okay.
Past tense.
Yeah, oh yeah, years ago.
We learn from our mistakes.
Yeah, I started this business in 2018. So no, 2016. Excuse me, the fall, October 15th of 2016. So I'm 8 years in now. I can't believe it. So can't believe it. Step 5. Again, we're tonight, Cory, step-by-step guide for home buyers. This is This Week in Real Estate podcast. Jason Schultz, USA Mortgage, Cory, Otto, EXP Realty. Cory, we have pre-approved. We have our agent. We picked out our house. Now it's time to make an offer. Walk us through that process.
Yeah. So, again, if it's a scenario where I'm at the property with you and it's, I'm going to have a discussion with you. I'm going to let you know how many days it's been on the market. I'm going to look at if it's had any price drops since it was first listed. We're going to talk about that and then come up with a number of, what you want to offer the sellers. And at that same time, we're going to decide if we want to stay a little bit higher and ask for the sellers to credit the buyer the closing costs, because it's really the net with the seller, the bottom line that the seller's getting that we need to talk about. So I'm fine either way. I've been suggesting with buyers right now, it's, we've shifted to that buyer market. There is the opportunity in most cases, to get the sellers to pay for some of your closing costs, even if you have it on hand. And it's going to be, each individual buyer's decision. But I like to see the buyers keep cash on hand for either some updates or some unknown expenses. So depending on the scenario, if I think that you can ask for closing costs, I'm gonna suggest that and make that initial offer. So yeah, again, when we're talking about offer, first thing is price, and if you're going to ask for closing costs or not. The second thing that we're going to talk about is contingencies. So unless you are paying cash, you do need to have a financing contingency, and you do need to have appraisal contingency. So on the appraisal contingency, that's where Jason or Jackie is once we get that accepted offer, and that's part of your lending fees that you have. They're going to schedule an appraiser to go out and take a look at the property and make sure it meets the value that you're offering. So if you're getting an accepted offer for a $200,000 house, the appraiser needs to go out there, and the house needs to be, valued by the appraiser at least $200,000. If we have that appraisal contingency and the appraiser says, hey, it's only worth $195,000, then we do need to renegotiate with the seller to get that price down to match the appraisal. And the second contingency is the financing contingency. What that's going to do is it's going to protect you with both an interest rate. So we're going to come up with an interest rate that a max interest rate that you're comfortable with, and that's going to be part of the financing contingency. And if we get an accepted offer and something drastically changes and interest rates go higher than the percentage that we have in your financing contingency, you are going to be able to potentially back out of that deal with the financing contingency if you can't, afford it any longer, or something drastic happens with a job change or something. So there's several reasons for a financing contingency to protect you.
Yeah, I would say everything's so truly to protect the buyer, Cory. A lot of it was put in during the Dodd-Frank after the crash of 8 and 9 and 10. Congress got involved. Normally, I'm not very big on the government get involved, but they put a lot of rules on our thing. I saw a meme the other day on lab coat agents. They said, is Elon Musk going to eliminate the CFPB? I just started laughing. It was like they just did it as clickbait. There was like 900 comments on it, but it was kind of funny.
Mm-hmm.
It was kind of funny. So making an offer. All right. So we got pre-approved. We got our agent. We found our house. We made our offer. Now we're getting into the nuts and bolts of it, Cory. A lot of stuff that people don't talk about. Let's talk about inspections and appraisals. I want to go first, and you can jump in. Home inspections are not for your loan. I don't want to see it. Nothing. I'll let Cory touch on inspections. An appraisal is everything. again, I just said everything's there to protect the buyer. We're going to make sure that you're not overpaying for this house. When I say we, I mean the appraisal. I don't get to pick the appraiser. Back in 05 and 06, I got to pick the appraiser, and it was a good old boy club back then. I'll get you a case of Busch Light. I need you to say this house worth $200,000, and that's what kind of caused a lot of the problems we got into. We have what we call, it's like an appraisal panel. And we put an order out. It's grabbed. We don't even know who the appraiser is until the actual appraisal is actually done. They set it up with the seller when they can come. It has to be done in so many days. But then the value of that house is based upon, the condition of the home, the size of the home, and then recently sold properties of that same size value. That's how we come up with that value. And then like an FHA or a VA or USDA loan, I have another agent who asked me to put together kind of a list of things that they look for. But again, it's that, like you said earlier, that peeling paint, a little rough around the edges, stuff like that, where it's not going to pass an FHA loan or a USDA loan or a VA loan. And the reason is, if you're approved for one of those loans, the assumption is you don't have an extra 20 or 30 grand laying around to make repairs after you close. And if the furnace is bad or the air conditioning's bad or something that would cause you just to say, just throw your hands up and walk away. And then we don't want a foreclosure situation. So that's truly what an appraisal is. Cory, can you touch on inspections?
Yeah. So really the inspections, I would split it into three. There's three major type of inspections. There certainly can be more. The one I'm going to first refer to is the general inspection. So we're going to put an inspection contingency, general inspection. Usually it's around 15 days. We're going to schedule an inspector. They're going to come and take a look at the property. In most cases, when I work with buyers and inspectors, the inspector likes to show up. It's about a 2 or 3 hour process. They like to be there the first couple hours on their own. And then the buyer comes in, we meet with the inspector. Inspector's finishing up the inspection, and we're going to go over it. The inspector's going to walk us through and, bring up and talk about everything that he's putting in the inspection report. And then when we leave there, we're going to get an inspection report.
Well said.
In order, then once we have that inspection report in hand, the inspector is going to put a lot more things in the inspection report. I mean, it's going to be 40 to 60 pages. It's going to be a lot of information.
Yeah.
But really what we need to focus on then as agent and a buyer is actual defects. So we're only able to renegotiate or ask for fixes if it's an actual defect. I've seen an inspector put in a report that just for, maintenance concerns or just for your information, like the hood above the stove isn't exhausted outside. It's one of those hood ranges that, recirculates it back into the kitchen. That's really just for knowledge.
Does the house smell like bacon?
That's right. My house smells like bacon. But so, at that point, I just don't like to see buyers get overwhelmed by an inspection report. There's a lot of things on there that are just for your knowledge, but the things that we're going to focus on and that we can renegotiate on are actual defects. So if the AC unit isn't working, if there's a crack window that wasn't disclosed and we didn't see, at a showing, if there's, foundation issues, major things that are defects, that's what we're going to, refocus on. The other two, which I won't touch on as much, we can go into detail in another podcast, but if it is in the country, you're also going to have the ability to do a well and septic inspection. And, those are important. I suggest those because those are pretty costly items that you want to make sure are functioning properly.
Yeah, that would be bad.
That'd
be bad.
And the third most common form of an inspection is also a radon test. So it's a unit that gets put into the basement of the property. It's there for 48 hours and measures the radon levels. Thank you. And
that was a big word, Cory. I helped you out with there. You owe me $1. Okay, we should make a chart like you owe me $1 chart. So
you saw that look in my face. And
you helped me out tonight too, so we're even now. I owe you Jimmy John for a couple more days. Yeah, so
that's right. Thanks. So yeah, general inspection, well and septic inspection, and radon inspection. So if you have any specific questions, I actually think that's going to be good for. We could do that future.
Well, and I,
just,
again, why you need a real estate agent. What we've talked about in the last 3 minutes is enough to get a real estate agent to help you through all that. So that you trust, that's their job. They're professionals. So number 7, again, step-by-step guide for home buyers. Cory and Jason here Sunday night this week in real estate. Finalize financing. So what I'm going to do as your lender, we're going to start wrapping things up. We got that conditional approval from underwriting, which means they like everything, but they want to see another set of bank statements, or they want to verify where your down payments come. Usually just 1 or 2 items here before we get that cleared to close. Cory, I mean, that's really what finalized financing is. We're through appraisal. All repairs have been made. If there's any repairs, all the negotiations between the buyer and the seller. Again, fans, I say fans a lot because I do a lot of tractor pulling podcasts, but whatever. Fans of This Week in Real Estate, Cory, we're going to get merch, hats, koozies. It's going to be awesome this week in real estate. To walk you through all of this, and get you to this point. We're probably, say, finalized financing. We're probably less than 10 days away now from closing. We're just kind of down to those kind of, hey, scheduling. Our scheduling is closed. We need 1 more set of bank statements before we get that clear to close, and that's complete the closing process there. And this is where we are. We have a clear to close from our from your lender. Title's working on final numbers and things like that. You're gonna come to closing. I, as your lender, or Jackie, or whoever you're working with, they're gonna say, hey, we need a cashier's check payable to the title company for this amount. You bring your driver's license. You sit down at title. A lot of the stuff now, we have our quick closes. You really only have to sign about 6 documents anymore at closing. Most of it's done the day, the morning of the closing from there. But completing the closing process, what's that mean on your end, Cory? Is there a final walkthrough, or what do we got going on?
Yeah. So again, we're like 3 days before closing. They're going to finalize things with either you or Jackie or their lender. You're going to tell them how much they need to bring to closing. They can either get a cashier's check, or they can make arrangements with the title company to do a transfer. And then we're going to do a final walkthrough anywhere from 24 hours beforehand, the day beforehand, the morning of. I usually like to do it the day beforehand just because if something comes up. So we're just going to be looking to make sure that if there were things that were requests to be fixed from the inspection, that it's done. We're going to get paid receipts for that, make sure the work's completed. And then we're just really checking to make sure nothing major has happened to the property. If the previous sellers were moving out, that we want to make sure that they didn't do any additional damage, or that there's something that isn't functioning. So it's 10-15 minute process. We're going to do a final walkthrough, and then we're going to be meeting at the title company. Again, you had said it, but either make arrangements or bringing your cashier's check, or doing setting up a wire transfer. Bring your driver's license. It's about a 45-minute to an hour process, and you're going to sign all your documents and then get the keys. The funnest part.
And again, all of this is, we tell you what's going to happen. It's not like you're just sitting there waiting for, wait for the next step. We're going to guide you through every step of the process. A good lender and a good real estate agent will help you through all of that. So, and if you got this far, you should be in pretty good hands. Get the keys. And that's a lot of people don't realize that that it's your house that day.
Right.
Like as soon as you get the keys, it's yours. Now I've seen a few times where, hey, we still need to get moved out today. There's a little bit of this and a little bit of that. For the most part, homes are empty and you can start moving in right away, which is the absolute worst part of buying a house, is moving. I moved way too many times in my life. I don't want to move ever again, but that's the worst. Post-purchase, set up utilities, update your address. Some people go out to get their driver's licenses. The biggest thing for me, we're going to, the day of closing, we're going to tell you when your first payment's due. We're going to mail you within, I would say, usually about 30 days or so. You get our investor sends you kind of like, hey, do this. This is how you pay online. This is when your first payments due, stuff like that. So it takes a couple weeks to set. I always do. It takes a couple weeks to kind of get that going. But I do warn people all the time of all the scams that do come, because it's public information that you bought a house. And there's going to be a lot of people that try to sell you additional insurance and all this stuff. And I have buyers all the time. I'm like, if you get something in the mail and it doesn't look right, just text me a picture of it. And I'm like, no, that's a scam. And I'll show them where on the postcard, they'll make it look like it came from USA Mortgage, Cory, but they didn't. You know, it's some, hey, we want to sell you insurance, or you need to add this, or send us $100, or pay for your title fees again, or, you know, your copy of your title work. It's a pain in the butt, but there's scammers everywhere, and that's what they try to do. So yeah.
Well, that went well.
Step-by-step guide to home buyers. I think we did good. I think anybody that watches this feels smarter, feels confident. They want to call Cory and Jason and let's party. So it's all good in the hood.
Yeah, definitely. If there's any questions that you have or anything else that you want us to go into more detail, again, it might have seemed like a lot of information all at once, but we just kind of wanted to look at the process from start to finish. It can be anywhere from minimum 15-day process to up to a 60-day process from, time of acceptance till closing. So there's a lot of things that happen in between that, between real estate agents, lenders. But, we handle things, keep things straight, keep them in order, and guide you through the whole process. So
this is where the part of I do this. You do not need 20% down to buy a house. So if that's holding you back, please talk to me or Jackie or a lender and find out what you do get pre-approved for. And my favorite thing, Cory, every week, if this potato can become vodka, you can become a homeowner. Oh, Cory, I have my T-shirt. My friends from California got me. Hold on one second. I got to show you this.
Oh, you're not on. Oh, yeah. You're muted. You must have unplugged your mic. Sign language. Okay, that's a clue that we need to sign off. All right, thanks everybody. And if you have any questions, go ahead and put them in the comment. Thanks again for watching, and we look forward to seeing you next Sunday.